Hey folks, welcome back. This lesson is going to be teaching my ICT SMT divergence or ICT smart money technique. Okay, the focus points on this module are the introduction to the ICT SMT, the SMT divergence in bullish conditions, and the SMT divergence in bearish conditions. Okay folks, we're looking at the Aussie dollar. This is a daily chart, and I'm going to cover the SMT divergence. Specifically, this teaching is only on the USDX SMT divergence. There's many different concepts for SMT that I teach, but just to keep things simple and easy to understand, one of the most powerful ones that I use is the relationship between the dollar index itself versus foreign currency pairs. All right, so we're going to take a look at the Aussie daily, and we're going to highlight this little area right in here. Okay, and what went on before the big move up. Now I'm going to cover some things that you've already been exposed to, so you can see how things start to more or less dovetail together, and it helps you give you a better understanding of what price action should do in the coming sessions and days. The SMT divergence, or SMT smart money technique, is something I discovered by studying relationships between correlated assets and correlated markets, and I actually developed it in the understanding between the commodity markets. When I was a commodity futures trader before FX, I would look at the grain markets, and I would look at the currency markets, and I would look at the bond markets, the 10-year, 5-year, and 30-year notes respectively, and I would compare their price action with one another. And I started seeing a setup that would always be there when significant price moves would occur. And I think that if we were in a room together and I asked everyone by raising their hand if they felt this move here on the Aussie dollar was significant and a worthwhile study in terms of what made this price action movement, I think everyone would raise their hand, or at least the majority of them in the room would raise their hand and agree that this was a significant price move. This is a daily chart, so it's over 150 pips, so it's respectable. So I want to go in and do some breakdown on this low in here and show you some of the things that takes place and how also you can use the SMT divergence for bullish scenarios, and that's what we're going to cover now. Okay, so I have a crude diagram up here, and this is going to more or less help me illustrate what it is that makes an SMT divergence. And for the sake of this specific bullish scenario, we're going to refer to the blue line up here. Okay, that's going to represent the Aussie dollar, and the red line is going to represent the dollar index. Okay, so in a symmetrical market where everything is as it should be, when the market creates a lower low, for instance in the Aussie dollar, the dollar index should make a comparable higher high. So while the foreign currency makes a lower low, it should be reasonably expected to see the dollar index make a higher high. This is referred to as a symmetrical market. Sometimes you will see the market create this. The market will fail to make a higher high at the time when the foreign currency makes a lower low. So if the dollar index fails to make a higher high at the same time that the Aussie dollar makes a lower low, this is a crack in correlation. So that means there's something going on underlying behind the price action that's showing heavy distribution in the dollar index because it's failing to make a higher high when it should reasonably do so if this is a lower low in Aussie. Conversely, another scenario might be this, and it would mean the same thing. Okay, so what I'm giving you two examples here that would give you the same analysis, that being there's a crack in correlation. Okay, so now we have the dollar index making a higher high, but now in this case, if this was representing the Aussie dollar is failing to make a lower low. So this is suggesting that Aussie dollar is being bought up because it's failing to make a lower low. Otherwise, it should have made a lower low as the dollar index made a higher high. So when we're looking at SMT, what we're doing is we're looking at exactly the same time frame at exactly the same reference points or candles. Either one of these scenarios means the same thing. What we just shown was earlier, the dollar index was failing to make a higher high while the Aussie dollar made a lower low. That is weakness on the part of dollar, so that would be bullish for Aussie dollar. Here we see the dollar index making a higher high and the Aussie dollar failing to make a lower low. That still is bullish for Aussie dollar. Okay, it takes just this relationship to be present in price action for you to see when there will be most likely a turning point, or in this case, accumulation in Aussie dollar. So we're going to go into this idea, and I'm going to show you how we can take this information So I'm going to take this idea and flesh it out using the Aussie dollar. Okay, and I want you to take a look at the overall price structure on the daily. Okay, so obviously we see Aussie dollar's been trading lower for a long period of time, basically since September of 2017. We've had several months of bearish prices. So if we go out to a weekly chart, okay, and we have this really nice dynamic price movement here. So we have to go right to the down close candles, and both these candles here are back to back down close candles. So we're going to use the top of the most highest candle. It's going to be our bullish order block, and you'll learn more about these in coming tutorials. So the high comes in at 75.17, and 75.17 is our level. So we're going to take that level, keep it there, and we're going to drop back down into the daily. Okay, so we have our level here. And also notice that we have equal lows. Okay, so we have equal lows here on the daily, and we'll look at that when we get down to an hourly chart. And we also have equal lows here as well. So we'll reference both of those liquidity pools, but we want to keep this level in mind because it's going to be significant in a couple minutes. If we drop down into an hourly chart, okay, so we can see the hourly price action dips below that weekly bullish order block. Okay, you can see that actual accumulation taking place, rallies up, retracements, optimal trade entry, and then nice expansion on the upside. We're going to take a look at a few things. Over here, we have our liquidity pool. Okay, so we have this area here. Okay, there's 30 pips below that. And then we have another area over here. Okay, so we have 30 pips below that, and takes us down below into the daily, into the weekly bullish order block. So we have two liquidity pools that price had reached for, and then we went inside of a weekly bullish order block. Okay, so we have a lot of things going for us in this particular pair. But I want you to take a look at this overall price structure in here. And I can see accumulation based on the price action itself. But what if we had an opportunity to use not an indicator, but price action of the dollar index itself to measure whether there's really smart money buying on the Aussie dollar here, or if it's just noise? Now again, we're assuming that we don't know this portion of the price action is taking place yet. We're just looking at this whole area right in here, the consolidation right before the start of the move higher. So let's take a look at this price action, bringing in the dollar index on an hourly chart as well. All you have to do is take your chart and open up an hourly chart. Open up an hourly chart of the dollar index, and plot it with your window feature here on Windows tab at the top of MT Forex platform, and you're going to click on horizontal. Okay, when you click on horizontal, if you have two charts open at one time, it'll plot it just like this. Now it may put the dollar index on the bottom side, or it may put it on the top. In this case, it has it on the top. It doesn't make a difference because we're going to be able to look at everything as we would regardless of what orientation it is. So we have the dollar index. Okay, you always want to check your little date over here. It's showing the 5th of December 2017, and we're going to have to roll back that by zooming in, so that way we have the same reference markers. Okay, and I want you to take a look at it closely and see what you see here. I'm not going to say anything yet. I want you to take a look at what you can spot on price action alone. Okay, we have the Aussie dollar failing to make lower lows here. At the same time, the dollar index was making higher highs. Okay, see that? There's the start of accumulation in the Aussie dollar. Then we have the Aussie dollar making a higher high relative to this high here. So if we draw a straight line down from that, we're going to reference this low. Okay, and if we draw a straight line imaginary from this high straight down, that represents this low. Okay, so what we have a graphic depiction of real accumulation in the Aussie, and okay, we can see the higher high in the dollar index. We should see a lower low in the Aussie dollar. We don't see that. So that means we have accumulation in Aussie dollar, distribution in the dollar index. Not surprisingly, this is exactly the same time when we saw the dollar index trade up into its daily resistance point. Okay, that old high. Look at this level here and this level here. This is distribution because we do not see the Aussie dollar making a lower low. So everything works like a teeter-totter. Okay, if one side goes down, the other side goes up. If one side goes up, the other side goes down. If we put the dollar index on one side of the teeter-totter and the Aussie dollar on the opposite end, what's being suggested here is there's more buying in the Aussie than there is buying on the dollar index. Even though the dollar index made a higher high here, it looks like on outward face value only, it looks like it's broke out and it's bullish. But if we start bringing in other correlated assets like inverse relationship between Aussie dollar and the dollar index, we can see that there's actually massive accumulation coming in at that very moment. And we've already seen early signs of it back here because the Aussie dollar was making no attempt to make a lower low when the dollar index was making a higher high. Okay. Then we had a really nice intermediate term high relative to the hourly chart and failure to go lower again on Aussie. So now we can look for optimal trade entry longs. At the same time that the market was getting ready to sell off with an optimal trade entry sell here. So I'll give you an example of what that looks like. Again, sticking to the bodies of the candles, the bulk of the volume. Right. There's the lowest body. Boom. 70.5 level, and then down she goes. Here, similar idea, just in reverse. Okay, we have the lowest body here. Drag it up to the highest body. Perfect, 79%. And I'll zoom in on that, you guys can see it. Perfect delivery. Make sure I got it right on there because I don't want to cheat. Right there. Right on top of this body. Delivery of 79% on the fib. 300 extension, nails it beautifully. SMT divergence gives us an X-ray view of what accumulation and distribution may be taking place in price action. It admittedly is a little confusing if you have not seen it before or studied it, because it's one of those things that you have to study it for a while to get a couple examples of its use. But this would be a bullish example of it, with distribution in the dollar and accumulation in the Aussie dollar. So let's take an example of it being used in a bearish scenario. Okay, so here we have the dollar index on the top, hourly chart, and the cable hourly chart on the bottom. You can see that the dollar index here makes a lower low here. So face value, it looks like dollar is weak. At the same time, the cable market, you can see, is not making a higher high as you would expect it to do. So this is a cracking correlation. That means that this isn't weakness. This is in fact weakness, okay? Because it failed to make a higher high when it should have, with the dollar making a lower low. This shows underlying weakness in the cable, and this is actually a false move below the old low. So this is going to be accumulated for the longs for the dollar, which is going to translate into a weaker British pound. And you can take that scenario and anticipate weakness and start looking for areas of liquidity for cable underneath old lows, and they would be your targets. And we have lows over here equal, market trades to it there, and then we have equal lows over here, market trades to it here, and then finally below over here, and it does that as well. Okay, so this is an example of a bearish SMT divergence. When the dollar makes a lower low and the foreign currency fails to make a higher high, the weakness is in the foreign currency failing to make that higher high. This is going to be a turtle soup long, and this is going to be a fair swing or bearish scenario. And you can look for opportunities to get short with an optimal trade entry, sell in cable, highest body open or close, down to our reactionary low here. Optimal trade entry here. Stop would be above this high. You can see it goes to symmetrical price swing rather nicely. And we have smaller ones in here too. You could have used this range to this range here. Optimal trade entry. And again, goes to the symmetrical price swing as well. So there's several examples in here that you could have used for optimal trade entries on short for a weaker British pound because it failed to make a higher high when the dollar made that lower low. The premise behind it is, this is what makes it work, is this movement lower in the dollar upsets the majors, everything that's paired with the dollar. What we do is we look for currencies, okay, foreign currencies, to fail to show that same respective pattern, but in a mirror image. So if the dollar makes that lower low, we go through all the major currencies and seeing which one fails to make that higher high as you would expect it to do. If it doesn't, it's showing underlying weakness in that particular foreign currency, which is still bullish for the dollar. And what that means is we could be a buyer below this old low. And say this wasn't the dollar up here. Say they were reversed. Okay, say the lower chart here on the bottom, say that was the dollar index, and the top chart was cable. If I had this scenario here, I would be buying below that low here on cable with the idea that it's a turtle soup long, false breakout, or run on sell stops, and I would hope for higher prices as a result. Okay, folks, hopefully you've enjoyed this presentation. If you like what you saw and you want to find more, you can go to my website at theinnercircletrader.com.